All right, everybody, and welcome to the Futures Trading Coach webinar on navigating the call room and AMA Ask Me Anything. And we're getting ready to get underway here shortly. Just want to let a few more people file in, and we'll hit it straight away, and we'll go from there. If you have any questions, we did get some questions previous, and if you have anything, type them in as we go along, and we can be sure to answer them for you as well. But we're going to try to cover things, and you can ask questions as you go along. We want to make sure you're understanding everything in the call room when you come in with us. So we'll be underway in about a minute or so here, guys. All right, guys. So we're going to get underway here. We're going to start with the webinar, and I think what I'm going to do is I'm going to start by just going over generally the premise behind what we do. Okay, so what we do is we day trade the futures. We're flat at the end of the day. Okay, we trade on a 3-minute time frame, as you can see here on the chart. 3-minute time frame, and we primarily look for trades in the market in the NQ, the ES, and some crude oil. We do have a variety of different people that come into the call room. So, crude oil is bigger margin, requires a little bit more money. So I try to call the trades more in NASDAQ and the ES unless I see something really nice in the crude. Just kind of depends. That's what we do. The premise behind the trades is we trade based off of support and resistance, price action, with the understanding of what the normal retail trader is doing. What do I mean by that? Well, during the day, you have buyers and sellers all day long. Okay, wherever the market is going to end up at the end of the day is the fair value of the market. That's where it ended up when all the trading was done and everything was said and done. That's where the market ended up. So intraday, however, anything can happen. Market can go up, market can go down, we can be positive, we can go negative, we can come back positive. And that's, I don't really want to call it a game, but that is the game of the price action and what the algorithms, the high frequency traders, the bigger money traders, what they do to basically take advantage of what we call the weak the weekday traders. Okay, and by the way, when I mean weak, I mean we don't have a ton of money behind us. We're not piling on thousands of contracts. So technically we're weak too, but we know what we're doing, so we're not weak. We can navigate around things and we understand where the market's going to go. We try to get in at the best price, and we do fairly well on a day in and day out basis. Our general philosophy of entries and exits are that we micromanage our entries. We micromanage our entries and we macromanage our exits. What does that mean? Well, that means that we're very particular about when we get in. Okay, like it's got to be the right candle, it's got to be the right price, it's got to be a valid method setup. Okay, we're very particular. We don't believe in that garbage you hear out there about, well, it doesn't really matter what you get in, when where you get in, it matters what you do after you get in, and all that other kind of stuff. That's BS, especially when you're talking about, if you don't have a 20, 30, $40,000 account and you're in your intraday trading. You have to get your entry correct. Now, we believe in taking profits along the way. We don't really believe in giving back to the market, especially if you have multiple contracts. But we do macro manage our final exits. So let's say you went in with 2 or 3 or 4 contracts. You've taken profits along the way, and let 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 and let's say you had sorry about that. Let's say you had a runner. Well, we're going to let the macroeconomics of the market let us know when to get out. We call that a material change. And we'll go over that when we get into the setups and everything. We'll go over how that all works and how we recommend that. I want to get to the questions first that we have, because a lot of people emailed questions in advance. I want to get those out of the way. Some people couldn't attend, so we'll get those out of the way really quick, and then we'll dig into the setups and the management of things, and we'll go from there. So give me just 1 second here. Try to just maximize that, because we usually have plenty of trades to work with. But you can trade the bond futures, and that's a great way to trade the bonds. And as far as options go, we don't normally trade options. There's technically nothing wrong with options. The reason why we like futures and why we trade futures over stocks or options or anything like that is just the purity of the market. Okay, you're in, the market goes up, you make money. You're long. If you're short, the market goes down, you make money. Okay. When you start dealing with stocks and shorting stocks, you have to deal with what's called borrow. It's called a borrow. You don't technically, the stock doesn't actually exist. You're actually borrowing it from a broker who's covering it. It gets kind of complicated, but basically, it's just we try to keep things simple. Okay. With options, there's nothing wrong with options. The problem is there's two ways to trade options primarily. You trade them directionally, or you trade them by selling what they call selling time premium or time decay. That creates a problem in day trading because you have to typically trade a lot of contracts, typically out of the money stuff, to get them at a decent price. If you're buying options and you wanted to swing trade or position trade them, you're dealing with time decay. So if I buy the future, let's say I buy right here, I bought the market here, which we would never do, but let's just say I bought the market right here where you see my arrow, okay, around 1 o'clock Eastern. Um, and it just sat there, right? I'm not losing any money. It could sit there all day if it wants to, and I'm not losing any money, right? But with options, you have time decay. So literally, I mean minute, but it's not really broken down that much. Every minute, every hour, every day that goes by, it could be in the same spot and you're losing money, losing proposition. Now, that's buying options. Now, if you wanted to sell options, you can do what's called selling time premium. But again, if you're selling time premium, you need a huge account to collect that time premium to make far less money. And if you know how to trade directionally, in other words, if you wanted to trade the SPY options because you knew the market was going to go up for another 30 minutes or something like that, well, that's great, but just trade the future. Why deal with you're paying more commissions? You're dealing with if it stalls there for a couple hours and you have to stay in the position all day. You're losing money. I mean, you can get out at the same spot you got in and you can lose. So typically futures is the best way. We hear a lot of traders come. They typically start with stocks or even forex. Some of them start with stocks, make their way over to Forex, options, things like that. Nothing works for a variety of reasons. And, a lot of times they'll end up in futures. And a lot of times the reason why they tell us that they waited for futures is because they think it's risky. They think that, all these different kind of crazy things. Look, there's defined risk in futures. We know exactly what we're risking on a given trade. Yes, typically you can lose more in a quick amount of time, but you can also make a lot more because of the leverage, right? S&P's $50 a point. Every 4 ticks, you make $50 per contract. Okay, so we can get into all that if other questions come up, but that's basically our take on the bonds versus the options. And then the next question was also by Group Trader. How can you be consistently profitable? Well, Group Trader, the way to be consistently profitable is you have to have a profitable methodology. If you don't have something that works, I don't care what you do, you're not going to make money. I mean, or you could make money for a short period of time and then you end up losing money, giving it all back. It doesn't work really easily that way. You have to have a methodology that works. You cannot be what we call a slave to two masters, meaning, you're kind of partially doing this and you're partially doing other stuff that you did 6 months ago that you never made any money on. You have to have something that works. You have to understand how often it works, how often you could lose, how often you expect to get winning trades. Again, you don't know every trade traded, and you can't tell every trade if it's going to be a winner or a loser. That's statistically, that just doesn't work that way. The way probabilities and statistics work is that you got to gauge it over a lot of occurrences. Okay, so we typically use the theory every 100 trades. Even that's not really enough to gauge, but it's a good number. So we know if I take 100 trades, okay, and again, it could be this 100 trades, it could be one result. The next 100 trades will be a next result, but over the course of those trades, you will you will come out with what we expect to get, in the marketplace. Okay. But you have to know that, because if you don't know that, then if you take a loss or a couple losers, there's no confidence to keep taking the trades, right? Because what ends up happening is people go along, they try somebody's system, they lose a little bit. A lot of the systems don't work anyway, but assuming they did work, a lot of people wouldn't even give them the chance, because they make a few mistakes, they lose, and then all of a sudden they go on to something else. Oh, I lost $1,000 here. Oh, well, this must not work. I'm going to go on to something else. No, that might not be the case, right? Again, full disclaimer, unfortunately, it is the case with most of these methods out there, because most of these guys don't know what they're doing. They're guessing. They have indicators. They have all kinds of stuff. They're just trying to sell you a bunch of bill of goods. Okay. So, you just have to be able, you can't be profitable if you don't believe in what you're doing, or if you don't believe, if you're in a call room, in the call room moderator and what he's doing. But even then, you don't have the opportunity to go and back test the stuff and everything like that, because you just don't know. You're waiting on a call room person to make the call, which is okay. Okay, but you have to become comfortable with that. Um, Next question is by Mappa. Mappa is asking about risk reward ratio and success rate. And Mappa, this is a great question, because I get this all the time. Okay, people talk about, well, where's your first profit target? And then we'll tell them, and then they say, well, that's not a good risk to reward, because I'm risking $100 to make $60, or what. It's, first of all, the risk to reward is based off of the success rate. Okay, so it's a great question. That's why I say it's a great question. You could have a win rate of 55, 60%, and you can still make money, but your risk to reward better be 3 or 4 to 1. And it means you got to hold trades very long. I mean, if you're taking 3, 4 trades in crude and you're losing, okay, and then you finally get a winner, well, you need 40, 50 ticks in the trade just to break even, and then you got to make a profit average over those 5 trades. So you better be able to hold your trades, which is hard for some people to do. Okay, that's why the lower the win rate, the more difficult the methodology is for somebody, especially if you're just following along in a call room and you haven't had a chance to back test the methodology. It's much more complicated for somebody to kind of get their hands around and grip their hands around. So if you've got an 80 or 90% win rate, you don't need necessarily, I mean, you don't even need a 1-to-1 risk to reward ratio, right? But it just, so that matters, and we take that into account into what we do if we're trading 2 contracts or 3 contracts or whatever. That's why we're not all in, all out. We scale out so that we can take profits along the way if the market continues to go in our favor. So we're saying, over the course of this trade, okay, let's say we take an S play and we put 3 lots on in the ES. Well, we might risk $300. Well, we would expect to get, on 3 contracts total, we would expect to get, maybe we take something off at $50, and then we take something off and lock in $150, and then we have a runner, and maybe we get another $100, $150 on that, or something close to what we're risking. Even if it was half or 3/4, quite frankly, you could still make plenty of money. You just need more trades, you need more occurrences, because the win rate's so high, right? So, and again, we can go over all those numbers with you, Mappa. Send me an email, give me a call. I'm happy to discuss all that with you, and it goes for anybody else too who has questions about that. So I hope I answered that question for you, if that makes sense. And again, I'm happy to elaborate on that. George Mitchell would like help with pulling the trigger. Again, George, this goes back to the question about being consistently profitable. Okay, you're not going to be able to pull the trigger unless it's one of 2 things. In a call room, you either have to believe in the moderator, you have to believe what the moderator's saying, but what do you have to go off of your belief? I mean, if you just come into the room and it's only your first day or two, you don't really know the guy, right? So you got to listen to what the guy's saying, listen to what the guy's saying about the markets, and kind of trust that, okay? Some people don't have any problem pulling the trigger. I don't want to call them cowboys or anything like that, but maybe they have a decent size account. They come in and they say, "Well, I heard good things about this room. I got 20 grand in my account. You know, I'm gonna, take some trades, very small contracts, and if I'm, I'll give it, see if I'm, as long as I don't lose a couple $1,000s or more, I'm okay." Other people, especially the smaller the account you have, you really have to trust, okay? And this goes back to with pulling the trigger. If you have a methodology that you know and you've spent time learning, and you took, let's say we have our 4 core setups, our SNRS play, our understanding trade, our power play, our ZL. If you go and back test those, right? 100 occurrences, 300 occurrences, 500 occurrences, and you say, hey, yeah, this is the results. I back tested it under fast markets. I back tested it under slow markets. I know how to get in. I know the rules of engagement. Okay, all that kind of stuff. You're going to be more apt to pull the trigger. You're going to be more comfortable with it, right? Okay, but this idea that you can just come into a call room and after day one, I don't care if the call room monitor, like let's just say the market was coming down here in the NASDAQ, and let's say we were like right here, right? And the call room moderator says buy right here, okay, which we had a trade there, by the way, but a little bit lower. That's great. He's giving you the entry, okay, the market's screaming down, right? Here we go, boom, 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 boom. Are you going to put the thing, are you going to buy there? Maybe you do. Maybe you're like, oh my God, this is like catching a falling knife. This guy doesn't know what he's doing. The market's coming down. You're going to be more hesitant to pull the trigger. You're not only that, you're going to be more hesitant to pull the trigger. You're also going to be more hesitant to hold the trades. And that's very important. Very, very, very important. So you have to keep that in mind. So how do we get around that? How do we fix that? Well, you either have to spend a lot of time in the call room and really come to trust the moderator so that you can then say, gee, boy, this guy made like 4 calls today, 5 calls yesterday, 6 calls the day before, 3 calls today, and now you're going on week after week, day after day, and you're like, geez, this is pretty consistent. I'm a little more comfortable with this now. And it's different for everybody. I can't say you will spend 1 week in the call room and you will totally trust everything. It's different for everybody. It's not one size fits all. Or you have to say, wow, this is a great methodology. Maybe I'm on the simulator. I don't really feel comfortable putting real money at risk because I don't really, I'm not, I might make a mistake. I don't really know what I'm doing. I want to see how this goes. And then you watch day after day after day after day and say, geez, this is the real deal, man. These guys at Futures Trading Coach really know what they're doing. I need to learn this. I need to spend the time, and I need to learn what Rick knows or what Sam knows, who's our method creator, who created the whole methodology. So that's my best advice. Again, guys, every time I go through these questions, if you hear something that you would like me to elaborate on, type it in as we go along. If you just want to talk about it later or whatever, again, you can do that as well. We can do that. Just let me know, okay? Because we got a lot of people going here. Now, next question, YMRRTY. This person is not here. I don't really know what his question was. I guess he's asking, would he rather trade the YM or the RTY? Quite frankly, both of them are thinly traded. The RTY used to be the TF. This is the Russell Index. Used to be on all the exchanges. It was narrowed down. It was only on the ICE exchange. It got consolidated. This is some years ago. Traded a decent amount of contracts, maybe around, like around maybe something like the euro currency would trade or something like that. Today there's 122,000 contracts in the RTY. TF likely has more. The problem with the TF, what happened is when they consolidated it into one exchange, the ICE exchange, you have to pay like $100 some just for the data feed. just to get that. We used to trade the TF when we first had the call room, and then people are like, well, I don't want to spend that kind of money for data on that, or my broker doesn't support it or whatever. So we just cut that out and we put the NQ up. We can trade anything. Okay, that's the other very important thing I want people to understand. The methodology that we're trading does not only work with futures. You can trade anything. You can trade Apple stock, you can trade Netflix stock, Amazon stock, whatever you want. Why would you want to unless you had to? Because you're not getting the leverage. You're putting up a lot more margin, to put the trades on. It doesn't make a whole lot of sense. But you could if you wanted to. If you loved options, okay, or if you love Forex, methodology works beautiful on Forex. In fact, if you take your currency futures like the 6E, the 6A, all that kind of stuff, the Euro USD pair, the Euro USD pair in the Forex is almost the identical chart as the 6E futures, and sometimes you get more volume in the 6E futures. So it's but if you really just love the Forex, you can trade the methodology with the Forex. I mean, a power play is a power play. An understanding trade is an understanding trade. It doesn't matter what the market is. You pull up a 3-minute chart, you show me Apple, you show me whatever, depending on the day, if it's a choppy day, if it's a range-bound day, if it's a trending day, whatever it is, most of the time we know how to get in. Okay? So, with that being said, if I was going to pick one of the two, I'd probably pick the RTY. But we have people in the methodology that trade the YM. I mean, a lot of times, in fact, when we have trades, let's say like in the S&P, those similar trades could be taken in the YM. Okay, but we don't recommend people do that. I want to be very clear. We do not recommend anybody does that. If you're following along and you've got the YM up and I call trade in the S&P, every market is independent. There are synergies between the market. There are things that happens with the markets that look like they're happening the same way, but it's a dangerous game to play if you don't know what you're doing. Okay, so I recommend you take the trades in one of the markets that we call, if at all possible. The margin is the same in the YM as it is for the RTY. So there's no reason why you'd want to trade the YM versus the RTY or versus the NQ, because just trade what we're trading. You know what I mean? So that's that. Next question is, do you trade the first 30 minutes and last 30 minutes of the day? Yes. First of all, I don't trade in the afternoon. Okay. Could you? Sure. We always say people, and we always have a slogan, especially for our methodology students. If you're trading all day and you have to trade the last 30 minutes of the day, something's wrong. I mean, it is. I mean, because you should be at your goal where you need to be, or worse to worse, you have a losing day if that's the way it's going to end up. I mean, that's rare if you're taking all the trades, but you really shouldn't have to trade the last 30 minutes of the day. What happens is you have what's called market on close the last 30 minutes of the day, just like we have market on open in the morning, which is only about 9 to 10 minutes. And you get people placing orders at the end of the day, mutual funds, hedge funds that aren't necessarily pertaining to the chart that we're looking at on a smaller time frame. But if you know how to trade that, you certainly can. Okay, when you take the course to learn how to trade the methodology, okay, the one-on-one classes and everything like that, and there's a separate room that the mentoring students are in called the DNA room, the DNA of trading. You learn how to do all that. If you really want to trade the open, which is the first 2 or 3 minutes. Sometimes I call trades in the call room. I'm the call room moderator. Not always, but when I see something that looks ripe, I'll do it. Like today we had one. And the room isn't open at the end of the day, but if you know the method and sometimes people can only trade in the afternoon. They can't trade in the morning, right? You got to know how to navigate that. So I don't normally, if you're asking me that question, but can you with the method, with a few minor tweaks? Yes. It's just not as pure of a market at the end of the day because the levels haven't been put in and all that. How do you put stops on options trades with E-Trade? Steve, I do not know that. I do not use E-Trade. I actually have an E-Trade account, like a web-based account from a long time ago. I don't use it. I certainly don't trade options with it. I do play around with some options in my retirement account. I use Thinkorswim. Um, so I just don't know. You'd have to contact E-Trade technical support or, something like that for that. I just can't help you with that because I don't have the platform. Um, we're about 3/4 of the way done here with the questions. Is there any one setup of your several that you feel the most confident about? Is there any one setup of your several that you feel most confident about? Um, no. I mean, the setups, let me explain to you how we look at trading, okay? The methodology is comprised of several setups that allow you to get into the marketplace at various times. So let's say, for example, there was this long trade, right? Let's say, for example, there was this long trade in the NQ, and let's say you weren't here, or you didn't want to take it, or you missed it, or whatever. Well, most people, once the market goes 90 points, they're done. They don't have another setup, right? So the methodology is comprised where we can get in to the market several different ways, right? If we would have missed this trade, there was another trade up higher, but we were already in this one, okay, long. So there was no reason to recall it again because we were just in. I mean, if somebody got out, they got out, they made profits. There's nothing wrong with that. So and we don't call every single setup that's in there. We want to call the best ones that give people the best chance to get in and things like that. So yeah, you don't. We look at it as a whole. We look at everything as a whole. Okay, so no, if there's an S play, I'll take an S play. If there's a power play, I'll take a power play. The only thing I would say, and this doesn't necessarily go for our methodology, it's for any kind of trading. It's better to stick with the trend. I mean, if in other words, if I see in one market like crude, crude's up 1% and we get an S play that comes in crude, I might take that rather than try to short the NASDAQ on a day like today, especially early in the morning, sure. I mean, um, uh, I just want to get the questions out of the way because I might split this. We're trying to record this, and I might split this into two halves. Um, so I just want to get all the questions initially out of the way, and then if anybody has questions as we're going along with the setups, that would be perfectly fine. Um, uh, do you have anywhere near as many good setups in the afternoon as in the morning using your system? Well, typically the market moves better in the morning. Typically. Okay, 90% of the time, 95% of the time, your morning is going to be your better day. Sometimes, especially after a weekend or a long weekend, or sometimes on a Friday, the market starts off slow. It's like sleeping. Traders haven't came in yet, stuff like that. And then the afternoon's beautiful. Okay, but that's not normally. Normally, the better moves are in the morning. I want to clarify that we get setups in the afternoon. Okay, you just might not get as many moves or follow through necessarily in the afternoon because a lot of times, like today, market went up, paused, went up, sat there. We took the long here in the ES, but this is the Nasdaq. So, and then it sat there until the end of the day. So yeah, you could have grabbed a little something here. There was a couple opportunities in IRS and a couple things, but it depends on the day. Sometimes, like I said, if the market starts out slow in the morning, you could have better setups in the afternoon. But overall, in all, there are setups all day long. But we would prefer, it'd be better to trade in the morning if you can. But we have plenty of people that trade in the afternoon to do fine. So that's not an issue at all. You can trade any time really, as long as there's volume, decent amount of volume. Okay, just a couple more questions here. Is the Thinkorswim fill time on orders a good one? I've used Thinkorswim connected to NinjaTrader, um, and it's fine. I mean, I don't find Thinkorswim. I mean, if you're talking about milliseconds, I think it's probably a little bit slow on futures than something like um, a NinjaTrader or something like that. But yeah, it would be fine. I mean, Uh, you can get orders filled if you want to use Thinkorswim. The problem with Thinkorswim, if I had an issue, which I do, is the commissions. They're really more set up. You can get really good commission rates on Thinkorswim for options, especially if you do volume, but they're just not really a primarily future. I mean, they do futures, but their commissions are just sometimes people have reported some almost double commissions. Versus what you can get on like an AMP futures or a Ninja brokerage or something like that. What trading platform do you recommend? We don't recommend any particular platform. We use NinjaTrader. We're partners with NinjaTrader. Just because a lot of our traders use NinjaTrader, a lot of people use NinjaTrader, but we have a lot of people using MT-Trader. We have people using several different platforms that are out there. Our methodology is not platform dependent. Okay, it is not platform dependent. So you can use any platform you want. If you know the platform well, you know how to place orders, trail stops, things like that. You can use any platform you want. And next question. Why don't you guys trade Russell instead of crude? Crude barely moves. Well, first of all, I don't know who this guy. I mean, Kevin, I've never met you or anything like that. Crude moves plenty. You have to remember, guys, it's not. The chart could look like it's not moving that much, but it depends. I don't care about necessarily a big move in a market that, like for example, the NASDAQ, right? It looks like the NASDAQ, big moves in the NASDAQ, right? But the NASDAQ's only $5 a tick. The ES is $12.50 a tick. So the NASDAQ has to go 2.5 times, when you're looking at a move on the chart, okay, the NASDAQ has to go 2.5 times what the ES goes just to make the same amount of money, right? So if the ES goes, 3 points, right? NASDAQ has to go, like almost 10 points, 7, 8, 9, 10 points just to make the same amount of money, okay? So, yeah, sometimes those markets do move a little bit more, even equally speaking than the ES, but it's not like it's like as dramatic as it looks on the chart. Crude is $10 a penny, $10 a penny, right? So if crude moves a friggin' 20 cents, that's like a 4-point move in the S&P, right? So it's not. I mean, crude moves plenty. I mean, and again, people just like crude more. I mean, typically, I mean, right now there's 124,000 contracts in the RTY. There's 633,000 in crude. Part of it has to do with volume. Okay, you want to trade where traders are trading. Okay, now we don't. Our methodology is not based off of volume. Okay, but it's based off of what the normal retail traders are doing. And if there's no retail traders that are trading, the less traders you have, the less the market's going to move most times. Sometimes it can drift up or drift down on low volume, but typically that's not the case. The short answer is we can trade. We used to trade the Russell. We can trade the Russell. The methodology works in the Russell. There's no reason to have 5, 6 charts up there. So, and we have switched them. Like I said, we used to have the Russell, then we put the NQ on. We took the NQ off. We put gold on for a while. We did very well with gold. We had a lot of people interested in gold that were overseas, and because gold starts moving a little bit early in the morning, it's on an index, so we put that on for 3-4 months, took that off. No particular reason, just to kind of switch things up a little bit. And a lot of people requested, that we put the NQ back. So that's what we did. But I hope that answers your questions, or your question. I think that's the end of these pre-canned questions, along with the ones that were asked before we started this. So what we're going to do is we're going to just take a couple-minute break here, just a couple seconds, so I can pull up my other stuff, okay? And then what we're going to do is we're going to start going over the setups. We're going to get right into the setups, okay? We're going to go over all of the setups. I'm going to show you examples, what to expect on the setups, what we expect, when it moves in our favor, things like that, and try to show you examples of those. And so hopefully everybody has this to reference to, and can see, because some of them are called a little bit differently as well. So just give me a couple seconds, guys. We'll be right back, and we'll get right into it. All right, guys. Okay, so what we're going to do is we're going to go over our first core setup, okay, the S and the RS trade. The S and the RS trade are exactly the same, except the S is always a long. Okay, if you look at our previous intro videos, okay, the S play is always a long trade. Okay, the RS trade is always a short trade. All the other trades could be either long or short. Okay, there's a reason from a methodology standpoint why it's broken down like that and the other trades aren't, but all you need to know is any other trade that's called could be a long or a short, so the call room moderator will tell you the direction. Even on an S play or an RS, the you know we're going to give you the direction usually, but just know that if it's an S play, it's always going to be a long. If it's an RS, it's always going to be short. Now, the way the S and the RS are formed, I'm going to show you some examples of these so that we can go through it. So I'm going to show you in this chart here an S play, and I'm going to show you an RS play, okay, on the same chart here, and then we're going to just go through everything here. So just to give you an idea of how things are going to look and everything like that, this is an S play, okay. This is an RS play. Okay. Now, they're not always going to look the same way with as many candles and all that, but I want to show you what's going to typically happen. What's going to typically happen on an S play is you're going to see the market go up. Okay. It doesn't have to be necessarily this far. It depends on where the market's at and everything like that. Okay. Then what's going to happen is when the market goes up, or even before the market goes up, it could be down here. And the moderator may tell you, all right, guys, if we can get up a little bit higher, maybe we'll have an S play. Okay. Okay, so what you're looking for is you're going to have a move up. Again, it doesn't have to be this dramatic. This was big moves here. And then what's going to happen is you're going to get a pullback. Okay, and the moderator is going to give you a price. Okay, so let's say the market goes up here. Let me just clear this out of the way. Sorry about that. Clear this out of the way. Clear that out of the way, clear that out of the way, clear that out of the way. Okay, so let's say we're here. Okay, we're right here. Okay, and this candle goes in, right? And then this red candle comes in. Okay, now what the call room moderator is going to tell you, right, when this candle's here, let's say this red candle, we're right in the middle of the candle. Okay, this red one right there. First red one right there. Okay, now we're in the middle of the candle here. Okay, so the call room moderator will say, okay, guys, we might have an S play here. When this candle closes, okay, you're going to get long, and a lot of times we'll give you a price. Okay, we're going to say either just get long when the candle closes, within a tick or two. I mean, you don't want to be chasing the market. Okay, but if you can get it within a tick or at the price where it closes, that's perfectly fine. Okay, there should be no difference on whether or not you'd have a winner or a loser based on that. 9.5 out of 10 times. So, or there's three ways that this is going to be called. Okay, either it's going to be when this candle closes, get long. Okay, that's number one. When this candle closes, get long, and there's going to be a prerequisite, meaning as long as we're below 65.99 and above 65.97. So anywhere in that area, if it closes, just get long. Okay. 2 of the 3 scenarios, we're waiting for the candle to get closed. Most of the time on an S play, we're going to wait for the candle to close. There are certain scenarios, especially in fast markets, where we will get in and we'll just give you a price. Okay, we'll say like, okay, here's the red candle, and the moderator will say, all right, put your limit order at 95. Okay, if it gets to 95, just get long. Even if it's in the middle of the candle, it doesn't matter. Okay, if you're concerned, ask for clarification. Okay, especially in the beginning when you're first hearing these trades. Okay, so if it doesn't get to 95, then the moderator will tell you, okay, we didn't get there, just let it go. We either want the 95 price or we're not going to get in if it's in the middle of a candle. Okay, Same thing goes for any trades that we would have to add to. Okay, if we potentially have to add to a trade, we're going to tell you, get in here, put your stop. That's it. Or get in here, add down here. And again, we have to make the disclaimer on any trade that requires an add-on, a potential add-on, that you could potentially have to add to the trade. 85% of the time, you're not going to have to add. It's never going to get to that point. It's going to go to profits first, and then we manage our trade from there, which we're going to go into management as well on all these, okay? So 3 scenarios on the S play. Get long when the candle closes. Okay, that means if this red candle closes right there at 98.75, boom, you're long. Okay, and you put your stop, and that's it. Okay, and hopefully it goes up. Okay, if it goes down, you get stopped out. Okay, no big deal. Or if the moderator says, because remember, we're in the middle of the candle. If he says get long as anywhere it closes, between these two prices, then, as long as it's between those two. In other words, it might be here when he calls the trade, but he might say, well, if it closes between 96 and 95, get long. You have to listen. Okay, you have to listen to what's being said and what's being called, but it's always going to be one of those, primarily one of those 3 ways, or rarely in the middle of a candle. We've had a lot of fast markets and stuff lately, so there's been a few more that we've said try to get in the middle of the candle, but 8 to 9 out of 10 times that's rare. It's not going to happen, okay, because you should wait for the candle to close on an S play or an RS play, okay, which is different than other trades that we take, okay. Everyone's different. Okay, so you can go back to this video and you can review things. Okay, now I want to make this disclaimer. Okay, just like in football. Okay, just like in football, when you have your quarterback and he sees the defense doing something that they don't normally do or that they weren't expecting, what does he do? He calls an audible. Okay, every once in a while, most 98% of the time it's going to be like this. 99% of the time, every once in a while, you just got to listen. Guys, we might have an S play. Do this. Okay, you got to be prepared. Now I'm not going to tell you 2 seconds before unless it's super, super fast, and then, okay, you miss a trade. No big deal. Okay, you don't have to get every single one. You want to, of course, you should be able to get most of them. But like I said, we've been seeing unbelievable volatility levels lately, and even then, most people are able to get into most of the trades. But I'm just saying, it's not a big deal if you miss a trade. Just wait for the next trade, okay? Especially when you're new, okay? When when you're newer to the room, okay? Now, RS is the same way, okay? RS is the same way. The market's going to come down, okay? Again, doesn't have to be this dramatic. It's going to come up, okay? And we had it's going to come up, and it could be 2 candles. If it comes up, it could be 3 candles, it could be 6 candles. Usually it's between 1 to 3, typically 2 to 3, just to give you an idea. But depending on how big the move was, depending on what happened, it could be more. Okay, so we're sitting there with that green candle. Okay, it's in the middle of the candle. Call room moderator says, again, we need to see where it's at. We need to see where the candle's going to be at. I can't say get in when this candle closes if there's 20, 30 seconds left, because it could be up 10 points, right? So we let you know that there's going to be, hey guys, we might have an RS here. Wait a minute, let's see what happens. A candle goes by, 2 candles go by, whatever. All right, guys, get ready. Let's see what happens at the end of this candle. Okay, 68, 65, 84, 75. Let's say when I made the call, it was at 85 quarter, 85, or 84 quarter, whatever the case may be. When the candle closes, get short. That means when this candle closes, just get in. Okay, now if it goes down right away and you can't get 84, wherever this closed at 84.75, you can take 84.50 if you have to. Try to get at the price, but don't miss the trade over a tick. Okay, because again, we've done the math. We've went back and reviewed all the calls from the first 3 years in the call room. A tick mattered less than 1% of the time. In other words, if we trade with a 2-point stop, let's say it's a trade, there's no add, and we have a 2-point stop in the ES. If you got in 1 tick worse, it made no difference whether or not you had a loss or not. No difference. I mean, you took an extra tick of heat if it went against us, but then everybody else did. But it didn't make a difference most of the time. The important thing is to be in. Why? Well, because every once in a while, you would get stopped out by that to the tick. and maybe other people didn't. They skated by and they barely got it within that tick and they didn't get stopped out. You're going to be in all those other trades that you wouldn't have normally been in because you were worried about a tick, right? So all those winners that you got are going to more than make up for because you were in, are going to more than make up for the fact that occasionally, now again, you don't want to get in the habit, 2 ticks, if you're going to be getting a 2 ticks worse, I just trade with an extra tick stop. So if you're getting in 2 ticks worse, instead of an 8 tick stop, do a 9 tick stop. Okay, whatever the case may be. If I give you an ad price, just add it the same price, even if you have to get in at a tick or two worse. Doesn't matter. Okay, but you have to become comfortable with that. Okay, so you put your short in there, and boom, put your stop up there. Okay, unless again it's a situation where you have to add or something like that, then we'll give you that information, and balances around here. You get profits in along the way, and boom. Now, what we're going to do is we're going to get into trade management. Okay, we're going to get into every trade. We're going to get into the rules of how we get into the trade. Okay, and we're also going to get into how do we suggest managing the trade and what do we expect from the trade, because every trade is different as far as its price action. Okay, the way the way the trade's formed, the way the trades are formed. Okay, so this is how we get in on the S play. Does anybody have any question on entry of the S play? Entry of the S play. Entry of the S play. I already said Roger. Now, if you most of the time we're going to be waiting for the candle to close unless I call an audible. Okay, but most of the time on an S play or an RS, we're going to wait for the candle to close. Okay, and I'm going to start talking about it beforehand. Okay, when I can, unless something sets up really quick. But most of the case, I just don't call those if it's going to be too quick. Any other questions on the entry for the S and the RS? Okay, now let's get into the management of it. Let's say, for example, you're trading 2 contracts. Okay, you're going to get into the trade. Okay, right there. Okay, 84.75. Okay, the market's going to come down. You start taking profits at a point. 83.75. Obviously, if it goes against you, it goes against you. If it comes back, then you manage it the same way as far as profit taking. If it goes all the way up, then it's a stop. Okay, 84.75. Now, what we prefer in the call room, okay, because again, this isn't about making $1 million. This is about tight management. Okay, this is about, we want you to see, and you can clearly see, well, once I can give it a little wiggle room once I learn, I'm not going to have to take big risk, but I can stay in these trades a little bit longer, some of them, okay? Some of them where it's choppy and then it goes down or whatever the case may be. This is not a bad example of that, okay? Get into the 84.75, right? Well, now it comes down, right? Well, start taking profits at a point. Try to take something at 2 points. If you only have 2, though, you either get completely out at 2 points or you move your stop down, okay, and you see if you can get more out of it. So what happens is we start taking profits at a point. You take 1 contract off at a point, okay? You start out with an initial 8-tick stop, right? Once you get that first point, you move your stop down to -4. Some people go to -3 because they're worried about commissions, okay? We don't worry about commissions. You're giving it a little more room to breathe, okay? But you can do whatever you want, okay? You just can't go too tight with it right away. There's a reason, okay? Okay, now, once the trade gets to 2 points of profit, okay, in the ES, 15 to 20 ticks in the NASDAQ, okay? Once it gets to, well, actually, we're in the NASDAQ, right? So 84.75. So 82.75 would be 8 ticks, okay? 82.75 would be 8 ticks. You move your stop down, okay? Now, look at what happens here, okay? What happens here is it comes down. You get almost 50, you do get 15 ticks here from the 84.75 down to 80 quarter, whatever. You do get 15. So you could take profits there and just be out, okay? Or, okay, you move your stop down. Now, what's going to happen is if you move your stop down to here, right, 4 ticks above this 84.75, right, look what happens. The market goes down and then it comes back up, okay? So it gives you the 15 to 20, and then it comes back up, okay? So what we recommend on here, okay, and again, it depends on how many contracts you trade. Okay, let's say you had 4 contracts and you had 3 off, and you said, well, I want to give this a little bit of room. If it closes above where we got in, I'll get out or whatever. You know, you can do that. Okay, it's a little bit looser management. Okay, but once this thing gets to 15 to 20 ticks or 2 points in the ES, okay, you move that stop down to entry. Okay, so first target of 8 ticks. Some people try for 10. We recommend 8 in the NASDAQ. Okay, move your stop down to minus to -8, because originally, I'm sorry, I thought this was the ES. 20 tick stop. Move your stop down to -8. Okay, still -8. I think you would have been stopped out here. 84.75. It did go up to 86.75 barely. And this is what I mean about the wiggling. Okay, so my only other option to call it at a higher price is just say don't get in unless it gets up to 86, but then if it drops, you miss it. Okay, so again, we're trading off potentially getting shaken out of a few trades when in higher volatility to get you in, to get you with profits, ideally a couple points in the ES and 15 to 20 ticks in the NASDAQ and crude. Okay, and then if it goes from there, it just goes. We want it to go. Okay, we don't want, you know, we're going to move our stop down. So if it gets to 15 to 20 ticks, okay, in the NASDAQ, 2 points in the ES, and you only have 1 contract left, you either have to take your profit and call it a day, okay, make your $150, $140, depending on what market it is, or go to entry with your stop. Okay, in other words, you move your stop down from minus 20, you take 8 ticks, you move it down -8, you get 15 or 20, or if you don't want to take your profits, you still move your stop down. Or you can leave your stop up at -8 because you still can't lose on the trade. Moving your stop to entry guarantees that you at least make a little bit of money. Does that make sense to everybody? Okay, so again, there's more than one way to skin the cat. Okay, so somebody could just say, look, I'm going to take profits. I'm going to go -8 with my stop. I can't lose, right? So if it takes me out, I make nothing. If you're fine with that, that's fine. If you want to be a little bit more conservative and not give back and be a little bit more tight with it, now keep in mind we're already pretty tight, okay, with our management. Okay, once it goes to 15 or 20 ticks, go and you're going to try to get more, because sometimes it does this. Sometimes let's just say we would have gotten in here instead of here. Boom, it just goes straight down, right? Okay, so here would be at 1 entry. Now, I could have recalled this as well, but in this particular scenario, but let's just assume I didn't, then you're just out, okay? Okay, but let's say we got in after this candle. Boom, stop is up here, okay? Come down, take 8 to 10, move your stop down, okay? 15 to 20, either you take profits, or if you don't want to take your profits, move your stop down, okay? You know, within a tick or two, whatever you feel comfortable with. It doesn't have to be right to where you got in. If you want to give it a couple ticks, that's fine. But you don't want to, you know, you want to at least come out of it making a little something, okay, as opposed to a break even and you lose the commissions, okay. And boom, look what happens, okay. So that's what we're looking for, okay. Now, so again, we're covering setup, entry setup. We're covering how we manage the trade when it goes our way. Okay, when it goes our other way, it's easy on this because you either stopped out or you make money. I mean, so when it goes our way, we're managing that, and now we're going to manage what do we ideally want from this trade? What do we expect? Okay, I expect, okay, if the trade's going to be any good, okay, and this one was a little more choppy, so I wouldn't call that a beautiful RS. Okay, I mean it was a beautiful setup, but as far as the way it carried through and followed through, okay, what you want on an RS is you want to get in, or an S play or an RS, like right here, okay, when we got in, okay, right there, okay. Once you start getting profits and you move your stop up, so same thing here, okay, you get in, goes against you a little bit, comes back, or it just could go up right away. Okay, but once it starts going, you get your eight ticks. Some people again go for 10. I only say that because a lot of people try to do that. That's fine, but we recommend 8. Okay, you go up, you get your 10 or 8, whatever. You move your stop. Your stop is down here. You move your stop up to -8, right? On this S play, it should never come back if it's a beautiful S play. And on top of that, you want it to close and make a new high for the preceding immediate future. Okay, like there could be a new high way back here. There could be a higher high way back here. Okay, but for this trade, within a reasonable amount of time back here, you're looking for this thing to close up here and make a new high like it did right on that green candle there or green candle there. What does that mean? That means you have more of a chance of a continuation. Okay, now the question then becomes, how do we handle that? Okay, now what you're going to do, once this thing makes a new high, you definitely want to be at entry if you're going to try to get more. You don't want it to come back to your entry in a perfect world. Okay, you just, I mean, we wouldn't expect that with a classic trade. Okay, you see here, right here, how it went up. Okay, but it didn't quite go higher quite enough there, and then it came back down on the next candle. Once it got up into these two candles, we never would expect it to come back. It actually hit another target here at 66.05, okay, which later on we talked about when we got long over here, but again, that's a different issue. But so now the question always comes up, once the market starts going higher, what are we looking for? Well, okay, let's say you got a runner left still. Okay, we're looking for 2 opportunities for you to get out, and it's different in the call room than it is in the DNA room. When you're learning the methodology, you're either going to take profits at the next target that I tell you about, because I always try to give targets and prices. Okay, so I might say here, all right, guys, if we get above here and we make a new high, we're looking, it should try to make it up to around 66.05. Okay, I'll put a circle or I'll put a line, okay, on there. Okay, you have a choice. Okay, take the profit at the target, which could be, 30 ticks, could be 60 ticks, could be 25 ticks, could be 80 ticks away. I mean, it just, usually we have, multiple targets along the way to give people options, okay, to get out with if they're comfortable with their profit that they got. Okay, now what we're looking for here in this cluster of everything is, where could the market potentially start having a problem? Okay, and I'm going to tell you where it was. Okay, it was for 2 reasons. Okay, it was here, okay, and it was because it already hit our target. It never closed above the target. Well, actually, it did close above the target for like 1 candle by a couple ticks, 66.05, and then it didn't stay above. It's got to close above and stay above 1 candle, ideally 2. Okay, ideally 2. It never did that. So what happened here? We got into the trade. Okay, we took profits. Okay, if you were still in, you could have been out before that. Okay, we took profits. Okay, if you didn't get out here, you're going to be at entry with your stop. You cannot trail yet. Okay, if there ever becomes a time that you can trail, okay, if you're still in, I will tell you. Okay, because it's just too hard to explain on here and show you and go through all that. This is advanced trade management. Again, most people, 2-3 contracts, they're going to be out after 30, 40 ticks, 50 ticks anyway. And I'm going to tell you, I'm going to say, look, if you're still in, move your stop up. If I don't tell you to move your stop up, you got to be at entry if you want the best chance of staying in that trade. Okay, so keep that in mind. It's very important. That goes for any of the trades. Okay, that goes for any of the trades. If you have a question, if we're still in a trade and the thing's up 80 ticks and I didn't talk about trailing and you're still in, ask. Okay, say, hey Rick, I'm still in. I got 1 contract left from that S play. Can I trail? I don't want to give back any profits. Okay, because again, I'm answering a lot of questions. I'm trading on my as well. I can't sometimes, I just get sidetracked, especially if somebody's asking me another question because we've been in a trade for a while. I'm not complaining. It's just, that's what happens. Just ask. Okay. And I will let you know exactly when to trail and I will help you through the rest of that trade. Okay. And that goes for any of the setups. Okay. So does that make sense on the S play and the RS play? Does that make sense on the S play and the RS play? Does anybody have any questions about the S play or the RS play with respect to what are we looking for the setup? How do we manage it after we get in? What are we looking for an ideal move for continuation? Okay, does anybody have any questions on that besides the ones that were already asked? Okay, let me know. Let me know. Okay, now we're going to do the same thing with the other three setups, and then we're going to briefly talk about the advanced setups, okay? Now, the next trade we're going to talk about is the understanding trade. Understanding trade and the power play are similar in every regard, except there's a couple different caveats to them. Okay, one is in getting in. You have a different options with the power play versus the understanding trade, and then one is what we expect on those trades. Okay, so we're gonna cover the understanding trade first. Okay, we're gonna cover the understanding trade first. Okay, now we had an understanding trade right here short in the afternoon. Okay, an understanding trade here short. Okay, now I'm going to explain to you on an understanding trade. It's going to be the same scenario. Okay, the market's here. Okay, it's up. We get a big red candle, comes down. It's like, hey guys, we may have an understanding trade. Maybe we'll do something short, either an RS or an understanding trade or something like that. Let's see what happens. Okay, we get in. I'm going to tell you guys. I'm going to say, all right, if the market gets to 66.70, okay, 66.70. Okay, this is going to be like right there, anywhere. Okay, before it. If the market gets to 66.70, we have an understanding trade short. What does that mean? That means when it gets to 66.70, get short. Okay, there's no ifs, ands, or buts about it. Put a sell stop. Okay, and on the trade, you're getting short. There's one of two ways I'm going to call this. I'm either going to say if we get to 66.70, get short. Okay, it's an understanding trade, or I may say, which is rare, but maybe not in the 95%, maybe in the 80-85%, some 15% of the time, 10% of the time, I may say, all right, if we get to 66.70, try to get short 66.72. Okay, if I don't say that, if I just say, all right, guys, we got an understanding trade, 66.70 short. Okay, 66.70 get short. You're going to add, if need be, at 66.75. Okay, your stop's going to be at 66.80. Okay, and that's what you do. Either it comes up and you add, which brings up another question, or it goes down. You get into profits and you manage it the same way as the S play. Okay, start taking profits, 8 to 10 ticks. Move your stop down. 15 to 20. If you don't want to take profits, move your stop down to entry again. Okay, and then you wait for either the target or a material change or whatever. Okay. In this case, we had a short here and we had a long here. So, this thing wicked down there, so it would be hard to stay and you had to get back in up here. But, this would have been the target. If this was in the morning and we were short, that would have been the target. So, basically, it's the same as far as how you're taking your profits on there. One thing I want to explain about an understanding trade, okay? One thing I want to explain about an understanding trade, and I'm going to look for an example of it, okay? Sometimes an understanding trade can turn into an S play, okay? And I'm going to point this out for a reason, okay? I'm going to point this out for a reason. There was a possibility to also have an understanding trade here at a 66.95, okay, before the S play. Now, in this particular case, if we got long at 66.95 or 65.95, it never would have came back to our entry when the S play formed above it. Okay. Sometimes that's not the case. So with an understanding trade, it makes a move. Okay. And there's a possibility it can come back down and test close to or where we got in and create another setup potentially. Now, if we took the understanding trade, I might not call the S play. Maybe I will, maybe I won't, depending on what happens, depending on, if this thing shoots all the way up here, I know that most people are not going to still be in because some people will just put far away targets just in case and it shoots up and that's it, right? So now nobody's in. So depending on how early of the morning it is, how late of the morning it is, whatever the case may be, I may get us into this S play here, I might not. Okay, it just depends. Doesn't mean it's not a trade. I just don't, I don't call every trade. There's no reason to call every single trade. If I'm calling 4 or 5 trades in the morning, there might be 8 or 9. Okay, I'm trying to call because I'm trying to call what I consider the best ones for you, but most of them work. Okay, but sometimes maybe we take some more heat on the trade, but it still ends up working, meaning it goes against us a little bit. But a lot of times they're still going to work out anyway. It's not like I passed calling on 4 trades and they all would have been losers. Okay, so just keep in mind, there's many more trades there that, and then also keep in mind in the call room, we're only in 1 trade at a time with risk. Okay, so there could be 3 trades at the same time in 3 different markets, which happens sometimes, or at least 2. I'm only going to call 1. I'm going to call the one that I think is going to make the most money. A lot of times I'm right, sometimes I'm not. Sometimes I call a trade, we get in, you make 15 ticks in the NASDAQ. If you could have also taken in the ES and it made 10 points. Okay, just the way it is. Okay, if you know the methodology and you learn the methodology, you can take both if you want at the same time. There's all kinds of opportunities that you have if that's the case. So that's where we're at with the understanding trade. So we're going to get into the trade. It could come back and turn into an S play, and it could pull back to test like that. So you have to understand that the reason I'm telling you this is, let's say you take profits. Remember the normal, this is only on the understanding trade. Remember when you go up and it says, okay, 20 ticks and go right up to entry? Well, on an understanding trade, if you want to give it 3 or 4 ticks, it should never come that far below where we got in. Okay, but it could come close to it. You don't want to get scared if your stop is there. Okay, or it could come to it, to the tick. Okay, because that's the way the market works sometimes. You don't want to get stopped out to the tick and still go up, so you give it a couple ticks. Like if I took profits at, let's say I had 4 contracts or 5 contracts and I took some profits at 8 or 10 and then I took some at 20 and I had 2 left and I got 40 or 50 ticks and then this sucker comes back and I got 1 contract left. Well, if I just took 100 ticks out of the market, I can give 5 ticks, right? Or 4 ticks. Does that make sense? Does that make sense to everybody? Okay. So, and it's the same thing. Once it does that pullback, okay, and it goes back up, from a management standpoint, you treat the understanding trade the same as the S play. So look what happened here. This is a bad example. Let me go to this other one. Right here. Okay, we got into this trade, right? Now it hit a target, so that's a warning sign number 1 because it never got below the target. That's the number 1 warning sign. Number 2, it pulls back. Okay, so maybe there was an S play in here. I don't know. I'd have to look. Okay, but you never want this thing to come. If it doesn't, now the S play form or the RS forms, you want this thing to start coming down. Okay, so when this comes up and gives us a potential signal, and I'm going to tell you, okay, you're not going to know that because you don't know how to get into the setups without me telling you. But if we were short in this trade, I would tell you right here, and I would say, look, if you got a runner and you didn't take profits down here, this trade better go lower right here. If it doesn't go lower, and I'm going to give you an exact price. Okay, now not all the time, it just depends. Okay, I'm going to tell you. I help people manage their trades. I'm going to say, look, if this thing doesn't go lower, you better get out of your trade or move your stop down or trail or do whatever. Okay, so I try to help people. Unless everybody says they're out, then there's no reason to talk about it. Okay, so and then if it did go down from here and we were still in, then it would be like, okay, start trailing or whatever the case may be. Does that make sense? Does that make sense? Does everybody understand that? Okay. Now, we're going to get on to the power play. Okay. Okay. The power play. Okay. We had a power play today, a beautiful power play right here in the NQ. Okay. Now, the power play in the NQ, okay, was at 65.9175. 65.9175. So when this trade was over here, okay, we were right here. We put the red candle in. That red candle came in. Okay, then you got this green candle right there. Okay, okay, and then the candle closed. I said if we get to 65.9175, okay, when it was right in here, okay, power play, long. What does that mean? Okay, typically I'm going to tell you your options. Okay, I'm going to say if we print 65.9175, get long. You have two choices. Get long on a buy stop. If you're going to get long on a buy stop or short on a buy or sell stop on a power play, okay, and you're not going to wait for it to pull back for a limit, okay, a couple ticks, 2, 3, 4 ticks on a limit, you're going to be trading with a 2-tick bigger stop, okay, because the add point, you always have to add potentially on a power play, although we don't have to add, but about 15% of the time, you always have to be prepared to add. So in other words, 65.9175 is the trigger, okay? The price is 2 ticks lower than that 65.91 quarter, and the add is 20 ticks below that. So it's not 65.8675, it's 86 quarter. And I'm going to tell you all this. I'm going to say, this is the way I'm going to call it. Okay, I'm going to say, all right, guys, we might have a power play. If we print 65.9175, okay, get long straight away, or let it pull back to 65.91 quarter to 65.9075, anywhere in there. Try to get filled on a limit. There is no guarantee you will get filled on a limit order. Okay, there is no guarantee you will get filled on a limit order because it could just blow right through the price and go up. Okay, so I recommend, if you don't mind those type of trades, you just get in right on the buy stop or the sell stop. Okay, it is a 2-tick bigger risk. Okay, but again, it's only going to be 15% of the time that you're even going to have to add. And out of the 15% of the time that you have to add to a trade, you're going to be able to get out at or near break even. In other words, it's not going to just continue to keep going against us, but a few times out of 100. I mean, you're going to be able to get out of break even out of those 15 out of 100 times, 12, 13 times. I mean, you're only going to take a little bit bigger of a stop very few times. Okay, we don't have add-on stops that often. I mean, but if you don't understand, it can be a little scary if you don't, understand that. Okay. So I'm going to tell you again. I'm going to repeat, guys. We might have a power play. Nasdaq 65.9175 print. Get long, or try to get it on a limit. 65.9075 to 65.90. Whatever price I give you. It's your choice. You risk missing the trade, okay, to get a better price, which means you less of a chance you'll have to add, okay? But keep in mind we don't have to actually add that often. Okay, I keep saying this because that's the reality of things. Okay, we took 5, 6 trades today. We had to add once, and even then we knew we were going against a big trend and it was really choppy. That was in here. Okay, like I fully prepared everybody for that. Okay, we're against a huge trend. Okay, and 2 of the times it actually made decent money, a little bit. Okay, so does everybody understand the power play? Now, on the power play, after you get in the trade, it can act like an understanding trade to some level. We would expect this thing to go up a minimum of 20 ticks, minimum. Okay, if it does not close above 20 ticks from where we got in, okay, this is important. If it does not close above 20 ticks from where we got in, it could pull back. Okay, so when you're managing and you're moving your stops up, okay, you don't want it going way farther lower than where we got in. Okay, but it could come back 3, 4 ticks, 5 ticks. So again, you either just go tight with it, move your stop up like we recommend. Okay, take 8 to 10 ticks, move your stop up. If it goes 20, either take your profit or move the stop up to entry. In this case, it never came back. I mean, in this case, it just boom. I mean, any kind of reasonable trail that you would even do on your own, you know, you would have gotten all the way up, you know, pretty darn far, somewhere in this region, okay, which was a huge, huge trade, okay. And again, this was just today. Now, so we went over how to get into the power play, okay. We went over the ad. Okay, I'm going to tell you all the prices. Get in, add here, okay, if need be, okay. Once you get in, you move it, okay. What do you want for a continuation on the power play? Remember on the S play, we said we wanted it to make a new high from, you know, and I'm going to give you the levels. I'm going to give you everything. Okay, I'm going to say if we want to get to this target, we got to get to this price or whatever. I'm going to tell you most of the time. I'm going to help you manage the trade. Okay, but this is just a little, you know, precursor to everything. Now, 8 ticks in the ES, 20 ticks in the NASDAQ. Okay. Okay, if it doesn't close above 20 ticks in the NASDAQ from where we got in and 8 ticks in the ES, you have to be prepared it's going to come back a little bit, okay? Either a little bit or down to your entry, just like the understanding trade. If it closes above the 20 ticks, you want it to ideally stay above there and not close below it, okay, for the next target. Now, I gave everybody 66.10, I think it was in here, okay, 66.05, 66.10. And then I think everybody was out up in here, so I didn't give. I think the last guy got out around 20 or 30. You know, you don't need to get every single drop of the move, okay? But so that's what you're looking for on that, on the power play. So we went over entry, okay? We went over how to manage. Okay, we went over what we're looking for a continuation, which will affect how you manage. If you have any questions about this, if anybody has any questions and they're watching this video, go to www.futurestradingcoach, fill out the contact form and say, hey, dude, Rick, I watched your videos. I need clarification on something. Can you give me a call? I'll be happy to give you a call. Okay, we're here to help you so that you do the best in the room. Okay, we're here to help you, and we may have to do another video on this with the advanced trades and things like that. I don't know, but we're moving along pretty good here. We got well, the next one we're going to do is going to be the ZL. Okay, it's going to be the ZL, and I'm gonna pull up an example of a ZL. Okay, pull up an example of a ZL, and we had one yesterday, I believe. We had one yesterday right after the open. So let me pull up an example of a ZL. Now on a ZL, what typically happens is you got the market either going up and then we expect it to come down, or it's coming down and we expect it to go up. Okay, so when this market starts coming down, probably somewhere right in this area here, this is a ZL. Okay, and again, we're going to go over the scenarios here in the ZL. Now, just for the sake of assumption, I want you, well, it doesn't matter, that's fine. So here's ZL. Okay, now I'm going to say this candle's coming down here red. I'm going to say when this candle closes, okay, and we always wait for the candle to close on the ZL. Every once in a while, I'm going to call a price. If we get it, we get it. If we don't get it, we don't get in. Okay, in the middle of a candle. Okay, so I'm either going to say, all right, guys, we might have a ZL. Long, if the market gets to 65.25, long. Okay, 65.23, long. Whatever price I give you. Okay, or right before the candle closes right here at 23.50, wherever that's at there, I'm going to say, all right, when this candle closes here, get long. Okay, and I'm going to direct you. I'm going to say, we're looking for profits here. It could come down a little bit, whatever the case may be. Okay, so you're going to wait for the candle to close primarily on the ZL, okay, unless I call an audible, just like the S and the RS, unlike the understanding trade and the power play. I want to clarify that on the understanding trade and the power play. You never wait for the candle to close on an understanding trade and a power play. We never get in after the candle closes. It's a price, okay? So now if it happens to hit that price right when the candle closed, that's fine, but that's rare. 99% of the time you're going to be getting in the middle of a candle on the understanding trade and on the power play. Okay, that's just, and then on the ZL and the SNRS, most of the time it's going to be when the candle closes, except if I call an audible or maybe sometimes in very fast markets and things like that. Now, important thing to understand about the ZL. Okay, once you get into the ZL, you're going to start taking profits along the way. What I want you to understand about the ZL, and this isn't a perfect example of one, I'll try to find another one. We're long here. Okay, we're long here. Okay, now you see how this goes up, and again, this is a dramatic move because this was just a big move. Normally they're not this big and this dramatic. Okay, market goes up, same management as we talked about, right? 8 to 10, 15 to 20, move to stop, blah, 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 blah. Okay, but what I want you to understand is, and it didn't do it right here quite yet, but it comes close. On a ZL, okay, and actually the best ZLs do this, okay, on a ZL. When this thing starts making its move in our direction, okay, you have to expect it's going to come back down. Not it might come back down. In fact, you almost want it to come back down, because if it comes back down and fails either to make a new low or comes close to where we got in, but like this, but not close, that's even better to hold the trade. But that means you got to hold through all of this, right? That's why you can't trail yet. You got to be at entry. Okay. If it came back down to our entry, I'm going to tell you. I'm going to say, look, guys, if you want more, this thing might come down right to here. Okay. So you take your profit. If let's say you had 3, profit, and let's say you have 1 left. Maybe you still give it room. Okay. 8 ticks or whatever. Or if it closes below and makes a new low, you get out. And I tell you, I kind of tell you all that when we're walking through it, depending on who's still in the trade and all that other kind of stuff. So you almost want this to occur, okay, because you get a better move here. This is only if you have runners. Okay, this is a lot to study, guys. Okay, this is nothing. I mean, the methodology is, is similar to this. Okay. Now it doesn't always have to be that way. Sometimes you get in and it just goes straight up. It doesn't do this, but a lot of times it will come back down, not quite to the end, but almost to where we got in, and those are typically the best ones. In fact, if it comes all the way down and tests where we got in, it could still go up, but then we want certain things to happen. And again, I walk you through that because you don't know the methodology, so you don't know what to expect. So I help you with all that. Okay, so we get in, we wait for a price, okay, or candle close, get in. Okay, might not necessarily be a price. Because if it's 10 seconds, if I say, all right, we might have a ZL here, let's wait a second. 10 seconds left, 5 seconds left. All right, if we get in, when the candle closes, just get in. Or I'll say when the candle closes, try to get in 21. If you can't get 21, don't take it. Just listen to what I'm saying. Okay, but you have to have this other knowledge behind you to help you better, manage things as you go along and help you as you're going along. Okay, so we go over how to get into the ZL. Okay, then we also go over what to expect after the ZL happens and what could happen after the ZL, and we already know about management. Okay, now does anybody have any questions? Does anybody have any questions? Any questions? Any questions? Any questions? Yeah, I'll email you on that. Yes. I'll email you on that. Okay. Now, we're also going to go over briefly. In fact, let me see if I can find a better example, a more tighter example of the ZL here. Now what, 2018. Now there was one before this. We had a ZL right here, right there. There was a ZL, okay, right there. And then there's one where it just went down and didn't come back. This was overnight. So because there's less volume, okay, you remember how I said it could come up and test and then go down? You don't get that necessarily overnight, but again, we're not trading in the call room overnight, so it doesn't really matter. It's kind of irrelevant. on that. Let me see if I can find one more, just an example. Here's a good one actually here. It's a smaller move, but you can kind of see what I'm talking about. Right here. This was a ZL here. Okay, so if this market came up here, again, this is 7:30 in the morning. We weren't there yet. Okay, but right there, there's a ZL, right? But you see how it comes down? Okay, and it made, you know, it didn't make a ton, but it made from, I don't even know what was we would have gotten in probably around 0950. And again, this was pre-market, right? So it made, 8 to 10 ticks, right? Okay, and then you see how it comes up again to retest around where we got in. Do you see that? Does everybody see that? Okay, and then it comes down. So if you get 10 ticks, now in this case it wouldn't have mattered because again, the default strategy is you take 10 ticks, 8 ticks, you move your stop down. Never would have came up and taken you out. Where it becomes problematic is if it goes 20, right? Now you go to entry, now it could come up there, right? If it goes to 10, this is why we tell you to manage these things, a certain way, because most of the time it's going to provide you a nice way to get in and do things and everything like that. And then when you become comfortable with that, then if you want to, tweak a little bit within reason, you can certainly do that. Okay, once you're already in and you've got profits and everything, it doesn't matter. You can't lose, right? So this is another example of it coming back up and testing, and then boom. Okay, so on a ZL, you have to understand that you will do better in the room if you understand that. Because what happens is some people get 10 ticks, right? And they just get scared and they go right to entry. They don't want to go minus 10 because they don't want to sit in a trade and have it come all the way up and then they make nothing. You have to understand you can get away with that on an S play and an RS sometimes on a death candle. Okay, on a ZL you can't do that if you want more. Okay, now again, if this was in the regular market hours, it probably would have went 15 or 20, and then maybe it would have came up there, maybe it wouldn't have. I don't know. Okay, but that is your trade. The advanced trades, we have 3 advanced trades. We have a death candle, we have a playground trade, and we have an exhaustion trade. We had one this morning. Guys, on these trades, you just got to listen for the call. If you hear me say we might have an exhaustion trade, it might exhaust. The market looks like it's getting ready to exhaust, but you got to wait for me to give you a price or a direction. Okay. Or if you say we might have a death candle trade, or if you hear me say we might have a playground trade, okay, give you a few examples. Okay. This today here, okay, and it was a beautiful trade that we had. Okay, in the ES, okay. In the ES right here, we got short right there. Okay, so when this thing was coming up here and it was sitting up here, I just said, all right, guys, look, you're going to have to get short if you want to get short. It's an exhaustion trade. It looks like it's exhausting. Okay, like literally the market was like right here. I said, just get short. Okay, try to get a point. We want it to close below 475 was my exact words. I said, if we close below 475 and we stay closed below 475, okay, we stay below 475 on a close, okay, this thing could come down. And look what happened. And we were long up here. Six quarter was where it exhausted. Some people got 575, whatever the case may be. I figured it would come down enough to get everybody into a free trade. You move your stop down, same way, okay, boom, okay. There's all kinds of trades like this. There's playground trades. Up here, this was a playground, not this one. Where was it at? Playground trade, exhaustion trade, and death candle trade. Playground trade. This was a playground trade, right here. Okay, so if this market's coming down, and I say, all right, guys, either I'll say wait for the candle to close, or I'll just say 25.7750. Okay, if we get to 25.7750, buy. Playground trade. Okay, it's in the middle of the candle. Doesn't matter. I'm either going to tell you buy if it gets to this price, or I'm going to say when the candle closes, or here's the price after the candle closes. Okay, you follow the direction. Okay. Now, the reason why I don't call a lot of the advanced trades that often is because, okay, stuff like this happens. You get in, you get these wicks. It comes back down really quick, and I don't want the quick stuff for you guys because it's now on a death candle trade as well. Let's go over the death candle trade. Okay, death candle trade's kind of important because sometimes we get a death candle setup, a 3 candle combination, and certain things can happen, and I want people to understand your options there. If it does, let me see. Let me see if I can get a beautiful one here. This is not beautiful, but this was a death candle trade right here. After this doji, green candle doji right here. Okay. So when this candle is going to close right there, okay, we say, all right, guys, we got a death candle. Okay, and it closes at 25.9675. I'm going to just say, look, the market should try to come down and get short. Now, on a death candle trade, okay, what can happen is you see, I can't, you see right here, there's this little wick above the body, okay? Sometimes the wick is bigger. This isn't a perfect example of one, okay? But I just want to show you what could happen here. So what happens is after this candle closes, it can go up to try to get back above that wick, okay? Okay, so you can wait. If you want to wait for it to try to come get back above that wick, and then if it starts coming down, get in, you can do that. If you want to try to get a little, or you could just get in right away, understanding that it may go up there. Sometime the wick could be 1.5 or a point in the ES. Okay, you can have a point wick, right? So you got to understand on a death candle trade that retest, in fact, you want that retest to happen because it'll go. But I just tell people to get in because sometimes it's too fast. You can't, I don't want to sit there and risk that and then the thing comes crashing down and nobody's in. Okay, so typically I'm going to say probably 5 or 10 seconds before the candle closes, 15 seconds max, because I got to see where it's going to be at. Okay, all right, death candle, when this candle closes, get short. You either get short right when that candle closes at the bottom right there, understanding that it can go up. Okay, it closed at 96.50. It can go up to at least 97. Okay, at least. Okay, and what you want, if it does go above there, is you want it to come back down rather quickly. Otherwise, we just get out of the trade. And I'll tell you that. Okay, sometimes they're fast. That's why they're called advanced trades. Okay, or I'll just say most of the time I'll just either it's a stop out or it's not. Okay, or whatever the direction I give. Okay, that's what you want to do, and that's what you want to try to, you know. So does everybody feel like they have a little bit better understanding of how the trades are called, how to get into the trades, what to look for after you get in the trades, um, things like that. Does anybody have any questions about any of that? Does anybody have any questions about any of that? Let me know if you have any questions about any of that. Any questions about any of that? Had some good ones today earlier. Any questions about any of that? Yes. 1 second, guys. 1 second.